Hey guys, happy Monday. Hope everybody's doing well. This video is a twofer. We're going to look at the Mass Investors video, AMC stock, gamma squeeze coming, as well as Short the VIX's video, AMC stock, market makers have a massive problem, 90% margin call. And of course, we're not going to look at the entirety of both of these videos, just the relevant parts where they talk about the gamma squeeze possibility, the option chain analysis, and we'll let Short the VIX tell us about Ortex because there was an exchange reported short interest update. The level of absurdity on this thing is super bullish, even more super bullish than these guys are on AMC stock. Okay, here we go. Let's look at TMI.
Will be great. But I do want to talk to you guys about something very specific. Here are the call options from yesterday. Now, this is the call options that I had from yesterday, which were actually pulled from the week prior. Okay, there were 116. Let me just zoom in here. 116,000 call options here, specifically for January 2021. Okay. That was what it was on Thursday. In between Thursday and now, of course, it was an extended long weekend. Take a look at what the numbers say now. 74,000 contracts, which to me means a couple things. One, chances are these were either sold or exercised. And if they were exercised, hold on to your shorts, people. There is going to be some sort of gamma action coming. Now, personally, I've seen the volatility in.
Okay, so let's take a look at this here. He's looking at the January 21st expiration. And let me scroll back. He's saying on Thursday, the Stonko tracker showed 116,000 in the money and 438 out of the money on the call side. Now, I want to call your attention as well to the puts. On the put side, in the money, 61,000, out of the money, 309,000, okay? So just note those numbers because he's not mentioning those. Then we'll move forward, and this is the numbers from today. So on the call side, in the money calls went down, out of the money calls went down, but also in the money puts went down, and out of the money puts went down. So he didn't mention that. He's just concerned about the calls because, of course, super bullish. So he said that it says two things.
The numbers say now. 74,000 contracts, which to me means a couple things. One, chances are these were either sold or exercised. And if they were exercised, hold on to your shorts, people. There is going to be some sort of gamma action coming. Now, personally, I've seen the volatility in these January options shoot up through the freaking roof. I was just looking at this before I jumped on the video, just personally just saying, hey, look, do I need to get in on some of these January options?
A couple things here. What is the difference between, so let me bring up a calculator. A peer calculator. I like my calculators big, okay? Okay, so we are talking about a difference of 41,880 contracts. And of course, we're talking about contracts, which convey the right but not the obligation to buy or sell, or in this case, buy, because they're call options, 100 shares of the underlying stock. So this would represent a possible 4.1 million shares. That's if all 41,000 of those contracts were exercised. Now, we know that roughly 10% of contracts are exercised. Most contracts are sold out. Many expire out of the money. Many of them expire worthless. Now, of course, we're talking about an expiration that's in the future. So those obviously have not expired, worthless. So most likely they were not exercised, most of them. Most likely they were just positions were closed. Profits were taken or losses were stopped and the contracts were closed. Now, it happened on the out of the money call side too. Now, in fact, we are looking at a difference of 176,000. Now, keep in mind there are also a lot more out of the money strikes. We got Thinkorswim here today. And we're looking at the current option chain. And you see that we have call options going from 50 cents up to $28. We have out of the monies going from $29 to $145. I'd like to call your attention to the 145 strike call. This is a popular one. Currently 173,968 on the open interest. Now I'm going to flip back on the think back function to last Thursday, the 23rd. And what we see here, we scroll down to the 145, we see 171,459 open interest on the 145. Same expiration. What does this tell us? The open interest is 2,000 higher. Also, the price is lower by about 4 cents. 4-cent change today. So these options are cheaper. We've got a 15 or so % increase in implied volatility. And, you know, we could go through each of these and see which ones went up and which ones went down. Not really keen on doing that right now. But I just want to look at the money here. So 30 has 10,000. Let's see what we got here. About 10,000. 22 has 10,000 in the past. Let's see. 22 also has 10,000. So I'm not sure exactly which ones of these were messed with on the open interest, but in any case, if history is any guide, we're probably not going to quote unquote see a bunch of gamma from this. That really doesn't make any sense anyway, because that would just be buying shares. Now if he's trying to insinuate a gamma squeeze, then that would be relative to market makers hedging their option positions that they've sold, delta hedging, which would come into play if you have a higher number of in-the-money calls. So this is lower by 40,000, so I'm not really sure what he's talking about there. But, they've misrepresented that whole notion this whole time. So, but let's get back to that. Let's just call it 40,000 contracts, and that was 4 million shares roughly. Now let's look and see what the value of that would be at $28. So you're looking at $112 million, but you're looking at 4 million shares, and that's if all 40,000 contracts were exercised. Now in reality, out of that 40,000, let's be generous. Let's say 15%. Okay, so you're looking at 6,000 contracts at 100 shares. You're looking at 600,000 shares being purchased if those 15% of calls were exercised. And I would venture to say that they probably weren't exercised. So looking at these charts here, it's really interesting how similar today's chart was to last Thursday. Very, very similar impulse style chart. I call that impulse. It's like an impulse response wave, and it's very similar. So that's interesting. But the volume, 30 million. So that's half of the average volume from the last 10 days, which is 65 million. So retail did not show up today. Retail phoned it in. And based on the option information here, at least, and who knows if this is accurate. This is from Stonko Tracker, but this is what they're presenting. And based on that, it doesn't seem like they showed up to buy options either. But that's really all. I'm going to let him talk out a little bit more here.
I've seen the volatility in these January options shoot up through the freaking roof. I was just looking at this before I jumped on the video, just personally just saying, hey, look, do I need to get in on some of these January options? I don't know if it's that time yet. And personally, I haven't been looking for options further out than February, but looking at 269, of course, it would be 269% implied volatility with these 145 options in January. I mean, those things are very, very, very liquid. 173 contracts open interest. If by any stretch of the imaginations, we get on a little bit of a run, we start tasting blood on our way into the new year, these call options right here would do serious damage to shorts, okay?
What? What are you talking about? No wonder there are so many of these goddamn calls. What you just watch tomorrow, okay? Watch tomorrow. Between this clown and short the VIX, you're going to see those number of open interest double tomorrow. You might, because these guys are just, oh my God, really? Okay, let me be perfectly clear. Those 145 call options are not going to do
jack shit
to shorts, okay? And if I need to explain that any further, I don't know what to say. It's been a year. People have been watching this for a year. They've been engaged in this stock for a goddamn year. And this guy is still saying this kind of horse shit, okay? That's what it is. It's horse shit. It's nonsense. The 145 is going to be very dangerous for the shorts. Oh, okay, TMI. Right, okay. I would be very, 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 let me say it one more time, very suspicious of those contracts. You have a delta of 3 cents. So that's a 0.03 delta on that, which at the current time would give that option a 3% chance of closing in the money at expiration. That is one way to interpret delta. Another way to interpret delta is what percentage of the currently open interest, and by extension shares that are implied by those open interest contracts, what percentage of them need to be hedged? And this would indicate 3%. 3%. So very low, negligible amount of shares. And that's why, and unfortunately the video is lost. I can't recover it. It's one of the few videos I would bring back from the old channel. But it was an explanation on what a gamma squeeze really is, how it works, why that effect happened in June, and why it's not going to happen now. Well, of course, that was talking about in August, September, why it wasn't going to happen then. And really, it's the same exact climate here. You're not seeing enough in the money call buying, because this delta, once you hit the money line, which is right here at 28, once you hit that, your deltas are going to be above 50. Now you're talking about 59, 63, 72, 92, 98, 100% of, theoretically, shares in those call options needing to be hedged. Now, we know that they don't hedge all of them because they know that only 10% are going to be exercised. Also, they can hedge their risk for those options with other instruments, with other assets. It's not strictly speaking, and the market makers know that the apes are trying to make this happen. So, yeah, they're not going to hedge all of the shares that the apes think they're going to hedge. They're not going to. And even if they were to, it would seem that the way they would go about doing it would be drastically different from what happened in early June. And in fact, we do see hedging happen, but we haven't seen anything like what happened before. Another big reason, which I can demonstrate here with Think Back as well, is we have all these out-of-the-money strikes where all these calls are wasted. All this premium is just going to get flushed out. Let me say that again. All these calls in the out-of-the-money section here, particularly above 40, you get above 40, 50, 60, 100, 120, you get up 145, you get up in these levels, in the stratosphere, these pie-in-the-sky levels, those calls are going to expire worthless. There's no question about it. Those are going to expire worthless. They are not going to contribute a goddamn thing to the gamma squeeze possibility. They're not going to contribute anything to anything except apes losing money buying cheap, out-of-the-money calls that provide no benefit whatsoever. Now, why is that different? Let's go back to Thinkorswim on demand. Let's go back. Let's go way back. Let's go back to May 24th. Okay, do you remember May 24th? What were you doing May 24th? So here we are, May 24th, and we're looking at the June 18th expiration. And what we see here is the price closed at $13.68. So yeah, we have some in the money here, and we have some out of the money here, but you have a much reduced amount of out of the money. And as we go through time here, you'll see something happen. See what's happening here? The money line is coming down. That means the price is going up. So 1641, 1956, 2612. Now what happened here? Oh, what happened? Okay, we have a 40 strike as our highest on May 27th. Okay, and look at these numbers. Look at all of the in-the-money calls you got here. All of these are all in the money, the shaded blue. Okay, you've got 5 digits on a lot of them. And these aren't cheap either. These are $7.55 for the 26. People were paying $7.55 a piece for these things. Okay, $7.80, $8.55, $8.60. So these were, valuable options. Your strikes go up to 40. You had 193,000 open at 40 on the 27th. Now this is for June 18th. Okay, that's important to keep in mind. I'm going to continue forward. Oh, so what happened on the 28th? We expanded our strikes to 70. Expanded them to 70. Still got a lot of open interest in the money. The June 18th, 40 calls. 224,000 open interest. 111,000 traded on May 28th. That's a massive amount. Okay? For $5 a piece is what they closed at. Going forward in time, we're about to get there. We're about to get there. Here we go. Run-up's coming up. June 1st, we're at 73 on the strikes, okay? 214,000 open interest on the 40. It's still out of the money, but look at all the open interest in the money still. All of this in the money. Price is going up. June 2nd, boom. 62 now in the money. All these calls in the money. Now, again, this is the June 18th, so they've got a couple weeks on them still. But look at all that open interest that's in the money. 214,000 of the 40 strikes. They are going for $33.45 a piece. Remember, they were 5 something before. A week before, they were 5, whatever it was. Now they're $33.45. 33. That's $3,300 per contract. That's just something absolutely wild to see and experience. Anyway, so this is why you had this effect. And even here, now we have 120 strike calls. Yep, we don't have too much out of the money in open interest or trading volume. It's not too bad. Let's continue forward in time. What happened? Price went down. Well, you've got less of these 40s open. That went down drastically. So now, of course, you're going to have some unhedging. Not just on this expiration. You have a couple weeklies in there too, but we're not really worried about the weeklies. So now you're starting to amass some of these 145s we've added now. They kept adding the strikes, adding the strikes. Now you're starting to get more open interest out of the money. This is the same time when the influencers really started pushing this narrative. Don't sell, don't sell, don't sell. This wasn't the squeeze. It's going to keep going up. Buy options. Wrench Capital started coming out with all of his option FUD. I mean, you still have a decent amount in the money, but these have already been hedged now. All these now have already been hedged. So you've lost the effect. It's not going to happen again. And indeed, it never happened again to that degree. Did not happen again to that degree. Let's move forward here. So now we're June 7th. We're $55, and now we're starting to, get some more of these out of the money. Let me move forward drastically here. So now we're looking at the July expiration. So now you're at the top end. Look at this. At the top end of the option chain, now you're seeing 30,000, 15,000, 27,000, 21,000, 41,000 on the 145s for July expiration. And you're seeing some 5-digit numbers in here, but the number is way low. You're seeing two strikes with open interest higher than 10,000 in the money and several out of the money. This is the beginning of the end of the narrative. This is the beginning of the end of the play, in my opinion. Because what happened was, I've said this, I'll say it, I will say it until I'm blue in the face. These high strikes being added, the apes couldn't resist because they were being told at the same time, hey, these are lottery tickets. These things are going to explode once it goes up to $10,000 a share. You have 2 of these things, you're going to be a millionaire. Well, that may be true, but it didn't happen because the thing that contributed to that happening in early June was not buying these calls. It was buying shares and it was buying in the money options. It was buying shares and buying in the money calls. And that wasn't happening. Just was not happening. So let's move forward. Let's go to the week of the expiration in July 16th. So again, look, not that much open here. You have 1 or 2 strike, I think 1 with 10,000 or more open. You've got several thousand here. It's spread out. Now you have 50,000 open at 145. People are still buying them. They're down to $5. They're down to 5 cents. They just keep dropping down. Let's go to the expiration and see what happened. So we're on the expiration. Price closed at $34.96. Barely anything really expiring in the money. Of course, I'm sure the charlatans on YouTube represented it. Oh, we had 20,000 contracts end in the money today. Well, didn't do a lot of good, did it? Did not do a lot of good. And here we are to the 145, and you had almost 60,000 of those suckers expire worthless. And we could do the same thing for every month. September was a particularly sad one as well on the monthly expiration. So in early September, you already had 80,000 145s open. Yeah, I mean, there's a few in here with some decent open interest, 5-digit open interest, but nothing compared to what's out of the money here. I mean, here's 80, 100, 120, 135, 45, 75. I mean, there's over 200,000 contracts out of the money here. And again, these are all going to expire worthless, as we'll see. And let's go to the day before the expiration. That's going to be the 16th. And we see here that we had, a few high numbers, but look at all these: 35, 28, 31, 16, 16, 21, 19, 83,000. 83. So several tens of thousands of these suckers ending basically worthless, not contributing a ever-loving thing to the gamma squeeze or the stock in general, because once you're 5% out of the money or so, you get a delta down around 20, 30, 20, 30. Those options are not going to contribute to the hedge buying. They're just not. There's no reason for them to, especially now with the overall climate, with the apes seemingly unable to provide the volume that they did in May and June. That's the other thing. The recent thing is the 70 times, trading 70 times the float this year is indicative of manipulation and illegal activity. Then I would like to ask this question, this very, very simple. Let me ask you this simple question. Who was it? Jesse James was the one that was giving me shit over this? Answer this one for me. It's not really a question, it's pointing it out. On June 1st, the trading volume was 508 million shares. I mean, that is the float. That is the float. It was traded on one day, okay? So I say this, so what? So fucking what? It means there was a lot of demand for the stock. It means the stock was trading in a very liquid manner. It doesn't mean that there was illegal activity. It doesn't indicate anything other than increased retail activity. That's all. Of course, you had some institutional and market maker activity as well. But in general, you see these high trading volumes, and that's indicative of increased retail activity. Now, I don't know if I'm even going to get to this short the VIX thing. This video is already too long. I've already wasted enough time. It's not even really worth it because it's garbage information. I don't even really... You know what? I'm just going to give this to you as your assignment. The link's in the description of that video. Both of these videos. There's really no reason for me to go through it because it's the same nonsense. Basically is what TMI said. But, that would be a good take-home assignment for you, my viewers and subscribers. Watch Short the VIX's video. Listen to what he says about the option chain, knowing what we've talked about, just knowing what you know about the option chain and how this stuff works. And you'll immediately spot the holes in his argument. You'll immediately understand that he is trying to paint a narrative. That's all he is doing. He's trying to paint this option chain as a problem for the market makers. They are scared. They are frightened. They are worried about it. So they are doing some manipulative shit. They are shifting their hidden short positions, which still has never been shown with any evidence. None. Zip. Nada. None. It's conspiratorial nonsense pushed by grifters like Short the VIX and TMI and the rest of these clowns. They have no facts. All they have. Oh, tired of this shorting BS. Tired of this shorting BS. Well, maybe you should learn how to trade, Matthew Perry, and stop putting all of your eggs into one basket. Stop misleading people. I bet the apes are tired of it too. They should be tired of you. They should be tired of TMI. They should be tired of all Jackson Hunter, the creative investor, Stock J, Benji, the ape father, Lou versus Wall Street, all these Matt Kors, New York Angelo, Shill Talk Daily, all of you guys, Finance News. You guys are a disgrace. You're misleading people. You're not giving them the truth. You're intentionally misleading them, filling their heads with conspiratorial nonsense. This channel is dedicated to calling those charlatans out, trying to provide an alternative source of information that is not dependent on the mainstream AMC MOAS narrative. So if you're thinking about leaving a comment, nasty comment, denigrating me, insulting me, pushing the same old tired conspiracy with no facts, calling me a hedgie, calling supporters of this channel shills, just beware, your comment might get deleted. I'm not doing this to provide a forum for these children, and that's what you are, your children, your little boys. I'm not doing this to give the little boys who can't face reality a place to push their narrative and put others down. I'm just not going to have it. I don't care. You can scream censorship all you want. I'm not going to stand for it. That's not what this channel is about. So don't even think about doing it. And if you do, be prepared to have it deleted. I don't care. And I'll block you from commenting. I really don't care. If you have nothing to add and you can't do it in a constructive, respectful way, then just go to any of these channels and leave a comment there. You'll get a bunch of likes, a bunch of praise. You'll be very popular. People will like you. Don't do it here. There's no reason for it. You will be blocked, okay? That's where I'm at with it. That's what happens when I get involved with the comments. Like, I wasn't involved in the comments before, and I just let it go, and I let the weeds overgrow it. But this time, I'm cutting the grass. I'm cutting the grass, taking care of my lawn. So anyway, that's about it. I just wanted to highlight that these guys have no clue about the option chain. They haven't done the research. They haven't looked back on Thinkorswim. I mean, all this stuff is there for free for you to look at. There's no reason not to take advantage of these tools. But, well, they're using Webull and Stonko Tracker. Oh, boy. That's really professional. Anyway, thanks for watching. If you have any questions, shoot them to me in a comment. Best thing to do, though, is to join the Telegram Finance Chat group. You can talk to me in real time. We can have a discussion. We can jump on voice chat if you want, and we can talk about it there. Wish more people would take advantage of that. I'd like to get that going again. Anyway, I always have it up, so if anybody is interested, click the link in the description. Join. Come on in. It's an open invitation. I mean, hell, even if the disrespectful commenters want to come in and try their luck there, go for it. Anyway, that's it. Think long and hard. If you're thinking about buying those 145 strike lottery tickets, remember, most people who play the lottery don't win the lottery, and they just end up wasting their money. So have a good night. I'll catch you later. See you here.